Traderstation, what's going on? Here we got a chart of the dollar franc, and if you guys listen to the podcast on Sunday, which if you guys aren't, go to Mixlr.com, that is Mixlr.com, and type in the Traderstation podcast, and all our episodes will go up. We start the podcast off with all giving you guys a pick of the week, so to speak. And all that is just, a chart that looks interesting to us. We all go around and we kind of just, play one side of it. We pick a side. So I picked the bull side on this dollar franc. I want to show you guys why I did that. And I want to show you guys the bear side because, we don't think there is a proper way you should be trading. As long as the math works out, the trader's equation works out, then everything is dandy. There are bulls and bears both making money, and it's just a matter of what your personality is and how you want to play it. So I picked playing this to the bull side. This is the daily chart, and I just really like this leg here. This leg right here that we've gotten since the move started on middle of October 15th. And this just seems like a strong leg. We've got strong bars one after another, closing, near their highs here, and completely broke this barrier, this 98 barrier. And we tried breaking here, but we found sellers. Now that's evident. We can't go straight up forever. And to be honest, I would rather have something like this, because when you look to the left here, look at this thing. It even started from down there, but even from up here, like if you were to draw lines to connect the top of all these bars, the slope would be so steep up here. And when something like this happens, it's too climatic. All the bulls already take their profits. Bears know it's climatic. They come in and they drive the market lower. But when something fairly orderly like this happens, that's when trends can continue for a little while. Something that comes to mind is just the futures chart today. This is the S&P 500 futures. Where is it? Oh yeah. So this is how the day started. I have the overnight session here too. But look at how orderly this is. There's nothing crazy climatic that's happening. And in fact, the most climatic part of the day was right here. Look what it was followed by. Bulls taking profits and bears selling. So when things happen nice and orderly, that's a good thing. Now, yeah, it is a little, where we are on the daily chart here. It is a little, I could understand how you could see it if, you might say it's climatic, but it's really not. And what I do like is if we go to the 4-hour chart here, we have this 50 EMA coming in, and it's already above 98. So the 50 could act as decent support if the 20 here isn't already. The 50 acts as decent support. Look at right here. When all these averages are trending, it can be some good spots. Obviously it didn't work here, that was the breakdown, but it did work the first time. And there are times here where the 50 really catches it. Here we broke through, and sometimes we do get a little bit over it. Here we had to break down first, but it was a false breakout, reversed up. Same thing that happens here, but we seem to be getting a good catch up with this area. So one thing you can do is pretty much enter now or whatever. If you want to wait till the 50 touch, it doesn't really matter. Order entry isn't so particular. Some people like buying on top of bars, so you can buy on top of these bars if you think this is going to be where the breakout is. Some people look at pushes up. Here's the bear channel. Price tried to go up once, it failed. Price tried to go up a second time here, it failed. Here's price making a third time trying to go up, and a lot of people count up to 4. After 4 of those, they say, forget it, we're going down. People do different things. I just like looking at the price context where we kind of are at the chart, and place my stop around 98. I like to go a little bit below those numbers, and sure, you might get stopped out and see it go in your favor again. But if the price action keeps lining up, there's nothing to say that you can't retake the trade. Now, if we're looking at this from the bearish perspective, you're thinking that, yeah, we are in this, this is another thing the bulls have going for them, is this channel that we're in. We draw that as a channel, contain as much price action as I can, and that looks pretty good, you know, so we might be trying to get another touch of this channel. The bears might be saying, no, you know, I think the channel should be here, and this is too climatic, plus there's nothing on this side that really contains the price action with that. I just kind of think this is, you know, people are going to sell on top of this high, just like we sold on top of this high. But the bulls are saying, oh, you know, we're making higher lows, you know, higher low from here, higher low from here, another higher low, and we're making higher highs, you know, higher highs from here. This is another higher high. But the bulls are still saying, oh, the bears are still saying, well, you know, I think this is all she wrote, and she's going to get down to the bottom of the channel now. And if you're playing it that way, then you would probably have to use somewhere above 1 as your stop. And above 1, if you entered right now, it would be 130 pips, you know, so you'd be risking around 130, 150 pips to get down to, oh, I would say 96, where we could possibly set a higher high and catch up with this trend line. It might have to be higher depending on how the price action works and where the trend line lines up. So you'd be risking about 130 pips to make to 96. You're talking 97.70, 96.70, about 270 pips. So you're risking 130 to make 270. So there's a, you know, 2-to-1 ratio. So that's not bad. But some of the bulls are saying, well, you know, if I can get and use 98 as a stop where the bulls will, as a place where the, you know, the bulls will protect, they'll come back in and buy here. Maybe we can get up to this, you know, 101, 102 area. So you're talking about from 98.69, you know, to 101, 102, you know, 300 pips or so. So you're only risking about 50, or you even stretch it out to 100 to make, you know, 300 pips. So that's a 3-to-1. That's trading. That's all it is. You know, what side do you want to be on? What do you look most comfortable with? For me, I like to find kind of gaps in areas where the bulls will protect. So the only reason I picked the bull side was because, well, I kind of like this area. It looks like we broke strongly above this area, and I think if we come back and retest it, we will find bulls there. And, you know, 4 hours is one of my favorite charts, and that 50 is what I look for support often, or resistance, whatever. And that's the reason why I picked the bullish side. And see, on the weekly chart, I don't really like this. It looks like, you know, if this was happening on the daily or the 4-hour chart, we found sellers above here. I'm thinking we're going back down to the middle of the range. But there's nothing to say we can't go up to, like, you know, test 1, you know, or even, yeah, and there's the channel, 101, 102, before we do that. You know, maybe we are in this bullish channel. So, if we're going to assign probabilities, you're talking, you know, 55 to 45, 47 to 53 in one favor or another. So either way, you've got to have a pretty good risk to reward ratio if you want to make that, you know, 45% or 55% play out time after time after time. So, you know, just how I look at the chart and how I was looking at the chart and why I picked that for the pick of the week on the podcast. So hope you guys found that helpful, and please let us know how the podcasts are going, the quality, the content, all the above. Email us, check out the Traderstation site and everything we offer on there, and you know, until the next video, thanks for listening, guys.